Again, if you think FDAP, think gross, no deductions. The flat tax found under Code Sections 881 and 871A are determined on a gross income basis and no deductions are permitted. Keep in mind, any expenses incurred in generating FDAP do not produce a tax benefit. Sometimes it might be better to be considered a U.S. trade or business and taxed on a net basis. For example, if you come into the United States and you borrow a bunch of money that you turn around and invest in U.S.-based investments, this is considered investment interest and normally would be deductible to a U.S. taxpayer. But since you're generating a passive investment income, that's a passive investment expense and non-deductible. Where this can really hurt is where you come into the U.S. and you make passive investments in real estate. The mortgage interest, property taxes, maintenance expenses, property management fees, all of those type related expenses are non-deductible if this is considered a passive investment type activity. But if your investment activity in the United States in real estate rises to the level of a trade of business because your activities are sufficient, continuous, and regular, you'll get net taxation. Again, sometimes it may be better to go net than gross. It just depends. Another area where you may be impacted is where you're generating royalty income in the United States. The typical expenses related to royalty income, such as cost recovery methods, depreciation, amortization, are non-deductible in a passive royalty situation by a foreign taxpayer.